Shanghai, silver is trading at, I got it here, $77.12. I repeat that, $77.12. That is a record premium over the Western price of 71.70. It's more than $5 ahead. Yesterday I said it was something was breaking because we were $3.50 ahead. Now we are over $5 ahead in Shanghai. What that means is there's a literal shortage of physical metal.
According to Clive Thompson, silver is in a real physical shortage. Shanghai silver is trading over $5 higher than Western prices, something that shouldn't exist unless physical metal is unavailable. Lease rates are exploding, arbitrage is broken, and China is aggressively buying. This is a structural failure, not speculation. Thanks for watching. Give a thumbs up and subscribe to Fine Metals for the latest insights.
People who would borrow silver are the manufacturers in the auto sector, the solar panel sector, the electronics sector, even Apple. I mean, all these companies need literally tons of silver for their manufacturing process. And if you don't have it, you have to buy it. And it doesn't matter what the price is, you have to buy it at whatever the price is. But if it's not available, you still have to get some, because you can't stop the manufacturing process while you wait for the refiners to deliver the silver, which might take another week or a month even. You have to keep getting that silver in the door, and of course with just-in-time sourcing, which is very much the thing these days. If it's not available on the spot market, you have no choice but to borrow it. So again, the borrowers can include manufacturers, and the high lease rates is the indication that silver in the spot market is in short supply. What are the portfolio managers doing about gold and silver? Well, we're hearing that many investment banks are starting to say that gold could be part of the portfolio going forwards. Why are they saying that? Well, the mathematicians are sitting down and doing the maths on what gold would have done, and I'm talking mainly gold more than silver, what gold would have done if it had been in the portfolio for the whole of 2025, 24, 23. And the maths will say that you would have had lower volatility and higher returns. So basically that means that they're going to start putting this gold and silver into portfolios in 2026. Now, it does take time for big firms to make a change in their asset allocation. There's a whole slew of things which have to be looked at. They have to look at the legal side. Is it allowed for certain portfolios? Is it allowed in the country? They have to look at how they're going to do it. What instruments will we use to get exposure to gold? They have to look at things like the custody arrangements. If we buy gold, how are we going to custody it? They've got to look at the agreements they got with their various counterparties. They've got to look at the customer mandates and see if the documentation allows them to do what they want to do. So there's a whole bunch of things. And then, of course, they've got to bring on board the chief investment officer, the investment committee, the senior management of the bank, and so forth. So it's not a straightforward process to put gold in the portfolio, but they've had a good year of strong gold rises, so it must have been discussed. And I think that many banks are starting to add it. Now, I've had a few banks already write to me with a 2026 letter, and I see the word gold being mentioned several times now. So I think that come 2026, portfolio managers will be starting to put gold into the portfolios. And I think right now, one of the things which is happening is that some of them are moving ahead of time. They're saying, what's going to happen when we present our portfolio for 2025, the 31st December 2025 portfolio to our clients? Every year, the clients always say, did you own da-da-da, whatever it happened to be. Maybe last year it was Nvidia, this year it'll be gold. So clients who've got investment portfolios tend to say to their portfolio managers, did you own? And then they name whatever they think would have been the best investment. Bitcoin, gold, Nvidia, technology, doesn't matter. So what you do as a portfolio manager is you start to think, how can I answer that question in a way where at least I say, no, I never thought of it. Well, the way you do that is before you get to the end of the year, you buy some gold. So if you're at 60% cash. So presumably you're 40% invested. It's not too bad. You had some of the rally. But what do you do? Because obviously there's still these predictions of a crash around the corner, and there always will be. So you have to remember, when you're investing, no matter when you're investing, there'll always be someone out there in the newspapers, on TV, or wherever, saying things are about to crash. And you know, it can be very off-putting, and you're very nervous that you buy and you're the last fool, the market's about to go down. So how would I deal with that? Well, I think the way to deal with it is to invest very small amounts gradually, so that if it goes up, at least you can feel you're making moves in the right direction, and if it goes down, you can think, well, at least I held a lot back for the crash. But that's all you can do, really. Invest a little bit at a time. And the other thing you can do is, if you're nervous about the markets, don't buy speculative investments. Buy the most solid companies you can find. The question is, why would anyone borrow silver? Well, there's two types of borrowers of silver that I know of. The first type is the shorts on Wall Street. So these would be the bullion banks, who typically play on COMEX. So what they do, they basically sell the futures, because the futures typically trade at a higher price than the spot price. And when the future gets to maturity, they then roll that into a futures contract. So constantly they're selling high at the future month and buying low, buying back the contract when it reaches maturity at a lower price. Nice, easy, guaranteed profit, or so it seems. Because if the physical metal existed, if it could be found, it would be immediately shipped to Shanghai and arbitraged away, so there'd be no difference between the two prices. Now, normally there is a difference between the Shanghai and COMEX price. Typically the difference is 50 cents or $1, almost never more than $1. But in the last couple of days, that difference has shifted significantly higher, basically meaning that people are unable to do the arbitrage because they can't lay their hands on the physical metal to arbitrage it away. So we're now in a situation where the prices are getting distorted. What is the real price? Is it the $77.12 in Shanghai, or is it the $71.70 in the Western markets? What's going to happen? Will the Western price of $71.70 continue rising until it matches the Shanghai price, or is the Shanghai price just too high and people are going to start selling in Shanghai? But that's not the case. It seems to be that there's strong buying coming out of China and pushing the price higher. But we don't know what will happen. But I'm just telling you, it's a very, very tight market in the physical side. Now, I did ask yesterday what the lease rate was. I said that about a month ago it was 7 to 8% for leasing silver. Any lease rate above 1%, or above 0% really, indicates a sudden tightness in the physical market. So why would a lot of people said, why would anyone in their right mind borrow silver when you can, but just get in the market? Makes no sense to pay 7 or 8%. By the way, a couple of people wrote to me and said the lease rate is currently 30%. I don't know where they got that figure from, because I can't find it and I can't prove it. But let's just say that might be an accurate number. So today platinum is fractionally down. It's down 0.84% at 2270. But of course, it was only a few days ago, it was well below 2000. So it's had a very good performance in the last few days. And palladium is down a bit more. Palladium had a really good performance yesterday, up 5%. Now it's down 5% today. It's down 5.75% at $1,753. From the studies I've read, both platinum and palladium are in short supply this year and will probably be so next year. But from the studies I'm reading, it looks like the supply and demand for palladium will come back into balance and go into a surplus in future years. Yet the supply and demand for platinum remains one of platinum deficit, i.e. not enough platinum being mined for as far out as the eye can see, which is 3 or 4 years. Just to round off, I'd like to mention to everybody who's interested in my 2026 Beat the Benchmark portfolio I put that up now on my website. The website's it's clivethompson.com. So my name, clivethompson.com. You can go there. You can download the 2026 portfolio as it is. None of the stocks will change between now and the 31st of December, but I will reset all the stocks to zero performance. In other words, it'll be as if $10,000 has been invested in each of the 10,000 stocks. Sorry, $10,000 invested in each of the 40 stocks as of 31st December. For those who followed my 2025 portfolio, you'll see it's up a nice 40-odd%. That's approximate. I haven't got the precise figure today because I can't get it on an iPad. But if you've got a computer and you're running Excel with Microsoft 365 and you've got a copy of the portfolio, you'll be able to see that it's up about 40% as I speak year to date. That's obviously beating all the major indices. There's no guarantee I'll beat the indices next year. Nothing I'm saying in this video or on in the portfolio, any stock in the portfolio, is investment advice. It's just my personal opinion. But I hope that it'll inspire you to find your own good investments.